Hey everybody, Jeff Rose, goodfinancialsense.com with a special little treat today. I want to do a little screencast, webcast, call it what you will, and to talk about an investment strategy, an investment option that I've been very partial to over the last couple of years. And just want to kind of introduce that to you for those of you who haven't heard of it. I don't view this as a supplement to investing in the stock market and individual stocks, mutual funds, etc. But I definitely think that it could be a complement or something to add to your investment pie. And that's what I want to talk about today. So without further ado, what I'm actually talking about today is what is called peer-to-peer lending. Peer-to-peer lending, or P2P lending, as it sometimes is abbreviated. And as you'll see here, kind of jumping the gun, one of the top peer-to-peer lending companies is Lending Club. But first, I want to go to Wikipedia and just read for you what exactly peer-to-peer lending is. And as Wikipedia states, it says peer-to-peer lending is a certain breed of financial transaction which occurs directly between the individuals or peers without the intermediation of a traditional financial institution. Person-to-person lending is for the most part a for-profit activity that distinguishes it from person-to-person charities, person-to-person philanthropy, and crowdfunding, which also creates connections between donors and recipients of donations but are nonprofit movements. So basically what peer-to-peer lending is, what I think of it is, imagine you, I think we've all had family members or friends that have asked us for money. And maybe you haven't. I know I've been in that situation on more than one occasion. And not a very fun situation to be in, by the way. But essentially what this peer-to-peer lending is, you have individuals that need to borrow money for whatever reason. Maybe it's to pay back a credit card, pay back a student loan. Maybe it's to pay off a credit card. Maybe it's to fund a business venture. Fill in the blank. I think we've all needed money at some point in time. Some of us by default go to credit cards, or maybe we go to a bank, etc. What peer-to-peer lending is that you have a mediator as a lending club that basically allows other people to invest or lend you that money and then also get a rate of return from that. And that's what's really kind of intriguing about this whole process, is that so basically you're able to lend money to some individual somewhere else in the country, and you can make a decent rate of return off that by loaning that person. So in essence, you're acting as the bank or the financial institution and making that rate of return off of it. So that's kind of the gist of it, and that's what makes it very intriguing. So as I mentioned, not to jump the gun, but one of the leader of peer-to-peer lending is Lending Club. And what really attracted me to Lending Club was that they have a tremendous social media awareness. They're on Facebook, they're on Twitter, they've got a blog, and that's really where I first learned about them. To be quite frank, I'd heard when I first heard of peer-to-peer lending, I had no idea what they were talking about, and it wasn't until I started reading some blog posts and started learning more about it that I really kind of got the concept. And the one thing, once you go to the Lending Club website, I think that just is the immediate attractor is this. Investors' average returns of 9.64%. So obviously that attracted me, and when you think of the stock market and how once upon a time you could hear that the market was making double-digit returns. A lot of this happened prior to 2008 and then prior to the recent downturn that we've had. So when you start talking 9.64% investor average returns, I think a lot of people are going to get interested. So at least they're going to find more about it. And that was my lure, or like that got me in. But real quick, just as a quick disclaimer, Lending Club has filed with the SEC, and right on their website you'll see a prospectus. So if you are interested in becoming an investor in Lending Club, do take a look at the prospectus so that way you can read all the information about it. So that's my quick little disclaimer on their prospectus. So what I really wanted to do today was actually walk you through how to invest with Lending Club. I've been investing with Lending Club for a few years now, And I don't have a whole lot invested, and you actually will see that here in a minute, because I didn't understand it, and I wanted to test drive it first, and I wanted to test drive it before, one, I put more money into it, and two, before I told more people about it, as far as suggesting that at least someone take a look at it. So here's the website, and I went ahead and logged in to where you can see where I am at right now. Right now, I have invested a total of $2,200, so not a big investment by any means. And I have my net annualized return is 10.8%. So right off the cuff, you can see that I'm already making more than the average, investor or lending club is making, almost a full percentage point more. That's not because I'm any great investor. I just, I'm very actually passive in the way that I choose my notes, which I'll show here in a minute. But some of the details, currently have $525 sitting in cash in my lending club account that I need to invest. And that's what we're going to show today, to show you how I invested, how you can actually do some research on that. So really quick, so how we do it is we go to invest, click on the link, and here is really why I love Lending Club. For the people that don't like to spend a lot of time doing a lot of research, they make it very, very, very simple to where you can either choose option 1, option 2, or option 3. And let's just assume that you are a very high-risk person and that you are looking at the 17%, that you look at that number, you're drooling over it, you want it, that's how much you want to make. By quickly clicking that option, they then will show you where you're investing your notes. And the notes basically is the agreement that you have with that person that you're lending to. And they rank them just like they would in a report card or like a bond, A ranking, B ranking, C ranking. Initially, you'll notice that by going the more aggressive direction, you do not have any of the A or B type investors. And these are your higher FICO score credit people, maybe are less likely to default on their loan. So this is definitely more of a high yield approach when it comes to peer-to-peer lending. So you're gonna, of that $525 I had to invest, $100 of that's going into C investors, $200 of that is going to D investors, $150 going to E, and then $75 going to F. So immediately, Lending Club breaks it down for you automatically. And I can't tell you how much I love that. And that's actually the strategy that I have done. I don't do the option 3, I typically do the option 1, but immediately they break down the notes for you. But they also show you your average interest rate on that is 17.9%, but because of some of those folks are going to default on their loans, they're estimating that 4.42% of that you will lose based on default. Then there is Lending Club's charge of 0.52%. So your projected return after all said and done is going to be approximately 12.25%. And that's approximately. Maybe all those people do pay back where you're all good and you actually make more, but that should just give you kind of a range. And let's just go to the next step real quick. And from here, here's another thing where you can start seeing what some of these loans are used for. For example, credit card consolidation, August 2011, $24,000 loan, debt consolidation loan, small business loan, etc. So you can actually see what these notes are. Amount left is how much more that person needs to borrow to take care of that debt. And if you want to take it one step further, you now can see more about the individual, their gross income per month, if they're a homeowner or not, length of employment, their current employer, where they're located, debt to income, their credit score range, and just gives you a lot more details about that creditor. And then even more, if you want, you can ask them questions if you're not confident, or just not, you need some more reassurance, you can actually, for this example here, they asked, what type of business are you starting? And they said, we are purchasing an existing flight school and looking for an investor, a short-term loan to assist with down payment. And this Lending Club actually gives you some direct questions to ask. They did change that a little bit over the past few years, I think, as far as Privacy Act, as far as some of the questions you could ask, but they give you a lot of the good basic questions to ask. So that's where you can learn more about it. One thing I didn't mention is that of that $525 that I have to invest, typically only $25 of that is going per individual note. So that's where diversification comes into play, to where you're not putting all your investment into one person, so therefore you can diversify. So I am going to do option 1. I'm much more comfortable. My projected return is to be lower, but as you can see, I'm actually doing better than that. I think I might have done some high risk in the beginning, but typically I've stuck with option 1 altogether. And you can see I've got a lot more of the A investors, A lenders, borrowers, B borrows, and none on the F and G side. So not much on the high yield. I like to be a little bit more conservative with this aspect. And immediately they break it down, and looks like I'm doing some overlap of my last entry. So let's see if we can get that straightened out. Oh, the other thing too, real quick, is you can actually choose the term of the note. Lending Club initially just started out with a 36-month, 3-year note. They now offer a 60-month note, 5-year note. So that's actually a little bit more return on that one, but you are locking your money. And you could also sell these notes too. So if you are wanting to not hold it for the maturity, you can find a buyer, just like kind of selling a stock on the open market, to find someone to unload those to. So, all right, let's see if I can finally get this figured out. I just want to invest. Should have started with the option 1 to begin with. There we go. Let's start over. Sorry about that. All right, option 1. Continue. And really quick, you can see some of those: pool project, other, debt consolidation loan, home improvement loan, etc., etc. So I could actually go in there a la carte, and I could add more money to one node, take some money away from another node, etc. You have the ability to do that. You also have the ability to build your own portfolios from scratch. So if you want to go through all the different notes that are available, you can do that as well. I personally don't have any interest in that, so I don't. So with $525, I'm going to invest into 21 different notes, and my average rate of return will be approximately 9.58%. And a quick look at the notes, and we are going to place the order. And you can then give your portfolio a name. I haven't done a very good job managing this, so I'm just going to assign it to portfolio 10, and we can go from there. And I will soon get a confirmation. Now, the one thing that with Lending Club that I have noticed is that, so I've just invested $525 into 21 individual notes. Now, most likely what will happen that not all of those notes will get the entire funding, and typically what that happens is that, so the investment that you thought you made, you don't make, you get it refunded back to you, and then from there you can go out and find some new notes. So that most likely will happen, just FYI. So, and that is it. That is it as far as how to invest with Lending Club. I mean, that's how simple it is. As far as who I would recommend this to, this is not a savings account replacement. This is not a CD replacement. Even though it is a 3-year and 5-year note, you might think of that as a 3 or 5-year CD. There is definitely more risk involved with this. So do not make this an apples to apples comparison. Typically, where I see this, in my own investment portfolio is, we have our emergency fund, we have our savings account, and this is just something to complement what I'm doing in my stocks. And like I said, I only have a small investment now, but we are planning on shifting some more money there. We were building a house, had some other improvements that we were doing, having a third child. So we wanted to have as much in cash, have more in cash than we probably should, but we just felt more comfortable doing that. Now that we've kind of got some of those things out of the way, I definitely a lot more comfortable moving some more cash into here, start making some more interest. I should also say I have never had any note on Lending Club default up to this point. So I've been doing it for just over 2 years, I believe, and have not had a default yet. Not saying that I won't, but I haven't had one yet. And if I do, I'll definitely report it. So if you got any more questions, let me know on this. You'll find a link below that it is an affiliate link. So if you do click it, open account, I do earn a bit of money for doing that. That's complete. You can also go to lendingclub.com directly, and won't get the affiliate, and that's fine by me as well. But if you have more questions on Lending Club, or if you got any experiences, please share. I'd love to hear more about it, and as this becomes more of a mainstream approach for a lot of people. This is Jeff Rose, goodfinancialsense.com, and we'll check you again. Take care.